We're delighted today to have Ciaran Roe, co-founder and chief commercial officer of HySights with us today. HySights is a pioneer in providing ratings for new energy and low emissions markets. Prior to establishing HySights, Ciaran was the global director of the liquefied natural gas sector at S&P Global Commodity Insights. Before that, he was global manager of metals pricing at S&P. Ciaran holds a Master of Arts from the University of Edinburgh. Ciaran, thank you so much for joining us.
Great to be here. Thanks, Taiwan.
So tell us a little bit about HySights. It's kind of a different business. You are the pioneer, I think, in this space. Well, starting with the name. And so tell us a little bit about HySights.
Absolutely. So I co-founded HySights about 18 months ago. And my whole career, I've been in energy and commodities, actually always focused on hard to electrify sectors, starting in steel making, moving to oil refining, then taking in some of the critical mineral markets. And then, as you mentioned, the last 6 years I was with S&P. I managed the LNG business from Singapore. And as part of that work, I was always involved in trying to help develop markets. So trying to make the way they traded more efficient, more transparent, and ultimately help standardization of contracts and terms in the industry. And with my current role with HySights, we approach the hard-to-abate molecule sectors. So these are basically the fuels that have the chance of being able to decarbonize things like steel making, aviation, maritime, baseload power to some extent. And we noticed that these markets are in a very different phase of evolution than some of those that we were covering at S&P. So as S&P, it was trying to help improve the trade of a commodity. Now what we're looking at is trying to help improve the investment situation for these molecules. So we try and help enable investment decision making in clean molecules, we call them. So these molecules that can help hard to electrify sectors. The way we do that is first by providing a uniform view of the industry. So up until now, every project, platform, technology is very much an idiosyncratic asset. It's not actually linked to each other. By creating a uniform method to evaluate and compare the industry, we help funds and large investor off-takers and the developers themselves being able to demonstrate the comparative quality of what they're looking to invest in, buy from, or develop.
Let me interrupt you for just a second. You used the term clean molecule, and I just want to just explain that a little bit for my audience, for whom not everyone would be familiar with that. So, what is a clean molecule?
That's a great question. So maybe it's always good to try and ground a discussion. So when we look at the transition, we look at the three different areas of transition that people regularly cite. Number one is decarbonization of electricity. So that's putting in more wind and solar and battery energy storage solutions in order to support the renewable deployment. And then you have the second phase, which is trying to electrify as much as you can. So that's road transport. That is other forms of transport like trains and so on, to try and make sure that we are decarbonizing the things that we can through electricity. And then the third element is on sectors that probably can't be electrified, and those include things like aviation, planes, especially long haul or wide body craft. Ships, so in the maritime sector, all those ships that are not near a port, not the small ones that are taking small loads from vessels, or sort of operating as piloting around the port. All those large ones, we haven't really found a way of decarbonizing them. And then there are other segments like refining and chemicals themselves that need fuels as agents or other sort of throughput products in order to create other products. And those sectors, we've not yet found ways really to use electricity to decarbonize them. We probably won't. And in that context, we call those potential replacements of the fossil fuel incumbents as clean molecules. So in aviation, it would be sustainable aviation fuel, which is one name, but lots of different pathways to get there. In maritime, you have things like Bio-LNG, but you also have green methanol and e-ammonia and so on. And in other sectors, you'd have different types of fuels. But let's say the basket of products that might be able to decarbonize hard to electrify sectors, we would classify them as clean molecules.
Okay. That's quite helpful because it's sometimes you hear the terms and for people who understand the vernacular, it's second nature. But for some of those who aren't, are a little Philistine in our in our background, it's like, what exactly is a clean molecule? I actually have a question. I can understand sort of automatically why it's hard to. You need aviation fuel that you need to keep the plane there. But why is it for shipping? Why is it hard for ships? Is it just because the load it's pushing?
Yeah, exactly. If you think about the power that you, or the force you would need to move a vessel, it's very significant. And currently the amount of space you'd need and number of batteries you'd need in order to be able to propel a vessel, the equations don't really add up. And the same with a plane, frankly, right? So those two sectors especially have been identified as ones that probably won't be electrified, especially when you're talking about large scale shipping, large scale aviation.
Right. But I interrupted you. You were telling us that you were actually telling us about HySights and how you are trying to figure out and helping investors look at projects and because. Yeah. How do you figure what's good and what stage they're in? So please carry on.
Yeah, maybe just taking a step back as to why we focused on clean molecules, right? When we started the company, we could have focused on those first two areas of the transition, which are actually going a lot better than the industrial decarbonization or clean molecules part. So decarbonization of electricity, as I'm sure a lot of your viewers know, the cost of producing electricity from renewables in many parts of the world is cheaper than the potential fossil fuel incumbent. And while those renewables are variable in their production of electrons, of electricity, the battery energy storage solution revolution that's happened the last 7-8 years means that actually you can ally intermittent renewables with storage, battery storage, where you store the electrons and then release them when the time is right. And that actually reduces the intermittency of renewables. And you can see the growth in renewables is stellar. It's fastest growing energy deployment of any type in history. So that's going very, very well. And then similarly, the electrification of things, so especially if we look at things like road transport, the rollout of EVs in many countries is absolutely astonishing. And again, we're getting to a place where EV is cheaper even at the upfront cost than a lot of the internal combustion engines or ICE vehicles. So those two sectors are going well. So why didn't we choose them? Well, number one, they're quite crowded. Number two, there's less of a problem, right? If you're already able to produce renewables at a cheaper cost than producing from a fossil fuel, there's not really a problem statement to solve there. And similarly with the electrification of things, if your EV is already cheaper than your ICE and the rollout is going in a stellar fashion, then what's the problem statement? When we spoke with a lot of the investment banks and large funds, and we spoke to their teams and really understood how they were made up, they showed us that the renewables were now graduated from the problem department, right, the difficult department, but the not sure how to solve or how to tackle departments, to quite vanilla project finance, quite vanilla funding solutions. So they've become a mature product in that sense from a lending and investment perspective. So the real issue, the real thing that we're struggling to scale right now is in the clean molecule, the hard to electrify sectors. And so that's what we decided to tackle, because ultimately the mission of the company is to try and help scale those sectors responsibly. So when I say HySights helps enable investment decision making, it's a very intentional phrase. We are not enabling investment decisions. We don't get paid if an investment is made, right? We try and make sure that the right decision is made. And I think that's very, very important. So it shows that we are neutral. We're not on the side of the buy or the sell. And our model that we use to evaluate or rate a project is the same, regardless of if we're approached by a project developer or platform, or if we're approached by a climate fund or an end user.
I guess if possible, could you give us an example? And obviously, if there's any proprietary information, I certainly wouldn't ask for that. But can you give us an example of something that a project that HySights is looking at, why it's difficult, and how you are adding value or you're looking to add value?
Yeah, maybe I'll give a high level view of how we rate a project. But effectively, we evaluate projects across 3 different high-level criteria, And within those criteria, there's hundreds or thousands of variables that we process. So the first high-level category is bankability. This is effectively the reliability of the project, the likelihood of the project to reach a successful close and operation. The second one is the cost to produce. So this is the break even of the project, taking into account pre-FID capex, pre-final investment decision capex, so before the plant is under construction, and also all the capex to actually start building and build the plant, and the operational expenditure ongoing of when the plant is up and running for 20, 25, 30 years, and understanding what that would mean as the actual minimum value at which you would sell the molecule based on those input costs, as well as the weighted average cost of capital. So effectively the lending rate for the JV, the sponsor of the project. So we have bankability, we have the cost to produce, and then we have the emissions intensity. So these three different categories we evaluate. And the emissions intensity is sometimes called a life cycle analysis. It's basically evaluating how much CO2e, carbon dioxide equivalent, is released when producing and then maybe consuming the molecule. And so in our platform, we give companies the ability to understand across these same metrics the relative quality of projects across the world. So from Asia Pacific to Europe, Middle East, Africa to the Americas. And these projects include everything from blue ammonia, so things that are gas, natural gas, into hydrogen, into ammonia with carbon capture on the hydrogen process, so they take the carbon and store it, to Bio-LNG, which is effectively using biological or biomass waste and then digesting it and upgrading it into biomethane and then liquefying it. So you see there's a high degree of complexity along the pathway, which makes it inherently difficult to do an eyeball comparison between these projects. But what HySight enables our clients to do is make those comparisons on the same basis using a methodology that we tested over about a year before we actually started evaluating projects on. And that testing included a lot of feedback from investment banks, a lot of feedback from climate funds and some of the energy majors to make sure that our methodology of understanding what risk and how it's perceived of these projects was correctly encapsulated in that methodology and those models. So if we think about those three high-level categories, right, your bankability, your cost to produce, and your emissions intensity, those three really answer the 3 points that people often cite as the energy trilemma, right? So that you want sustainable, reliable, and affordable energy. So obviously sustainable would be the emissions intensity, the reliable would be the bankability, and the affordable will be the cost to produce. So really we're giving people a view into the energy trilemma across the whole world, across multiple industries.
I guess how many projects are in the process of being rated or have already been weighted? And what does that pipeline sort of look like?
Yeah, so we've rated about 70 projects around the world. We have another 10 or so in the pipeline now. So by probably end of October, we'll have rated about 80 projects. And those include some of the large scale projects. So they're big sort of set piece projects, flagship projects of companies or even countries that we've rated. There are also much smaller scale projects, especially in bioenergy. So when you're using biomass into a fuel, those tend to be smaller because you're relying on a very outsized ratio of biomass in to clean molecule out. So, the ratio could be 8, 10 plus to 1. So you have 8, 10 tons of biomass and you have 1 ton of output, for example. So in that sort of situation, you're going to have a smaller output project. So there's a big range of size. And I think one of the things that's very attractive to us is that nearly all the ratings that we've done are of ex-ante projects, so projects that have not yet started operating. And that's really a reflection of the industry, right? When we say we're trying to help the industry scale, it's not started scaling particularly now, right? Probably sustainable aviation fuel is the largest product right now in clean molecules. Nearly all of the SAF, that's what it's called, the SAF that's being produced is produced through one production pathway, but there's probably only 2.5 million tons of SAF currently being produced this year. And that's the largest of all of these clean molecule markets, right? For aviation fuel, it's 300 and something million tons per annum. right? So this is a drop in the ocean so far of total aviation fuel demand. And our expectation is that aviation fuel demand and fuel for shipping will increase between now and 2050 quite significantly as the world population continues to grow but gets richer as well, right? We have a very strong positive correlation between GDP per capita and demand for flying and demand for buying and selling stuff around the sea.
Bio-LNG, that you mentioned that, and it's something interesting because I really hadn't heard that before. Now that's created from biomass into, I think you explained it better than I could, biomass into methane, and then you basically make the methane into LNG, which is easily transportable, and then you
That's right.
regasify it ultimately. Now that's a pretty small project. I guess it's a small stream right now because you need a lot
Yeah.
of
So
the methane.
maybe just it's funny with these clean molecules, right? Some of the technology is as old as the hills, and some is very cutting edge. So, and some of these clean molecules, some of the processes are very, very old, but then the finished product may be new. So I'd say that bioLNG fits that latter model, right? Where some parts of the process of producing bioLNG are more than decades old, right? So anaerobic digestion, where you are taking a biological source of something, crop waste or, um, you know, human waste or whatever, and you are basically putting it into a digestion tank, and you are then taking the biogas from that tank. And the biogas will have a content of methane and a content of carbon dioxide, and obviously the methane is the higher value thing. So you will try and extract you effectively upgrade it into a higher methane content product, and then you can sell it as biomethane. Now, what's been happening around the world is, farms that are producing a lot of biomass waste and so on. They will have a digester. A lot of them have a digester on site, so they'll be taking their crop waste or animal waste or whatever, and they'll be putting it in the digester, and they'll be creating biogas. And that biogas they will either use for heat locally, or they will burn it into power and inject that power into the power grid, um, and or the power network, and that's what's been happening for many decades. But it's only recently that biogas is starting to be upgraded into biomethane, and it's even more recently, I mean, only the last couple of years, that biomethane is being liquefied into bio-LNG or liquefied biomethane. Some people prefer to call it. So that liquefied biomethane or bio-LNG now can be used shipped around the world, Japan or Singapore or Korea, places that consume a lot of fossil LNG and have maybe limited ways they can decarbonize their baseload power generation, would take in bio-LNG and effectively displace some of the fossil LNG that they may otherwise use. And within Europe, for example, there is bio-LNG being used in Germany for transportation, mobility. And then also there is some that is being increasingly loaded as a maritime fuel onto vessels and burnt to power those ships. So there are multiple sectoral uses of bio-LNG. The thing that will eventually constrain it is the resource availability, right? So even if we get exceptionally good at tapping all the resource for of biomass, eventually there will be a constraint on the volume that you can produce. I mean, the IEA, the International Energy Agency, has done a lot of very good, groundbreaking global research on this that they've released recently. And I'd encourage again.
So who is, it sounds like we're still sort of early stages in many of these projects and ex ante, as you mentioned it. What kind of investors is interested in investing in this space where it may be potentially some time or some years before a plant, start, producing these clean molecules, starts running? What types of investors are looking at this?
Yeah, yeah. It's a real plethora of investors, and each project and platform will be seeking different types of investors, and the investors all have their own criteria that they keep to loosely or stringently for what type of investment they're looking at. Um, Probably to start with, some of the more active investors would be ones who need the volume of product from the project or platform. and they will either take that volume and trade it, or they will use it themselves. So this would be your large power generating companies. These could be, your large shipping companies that are increasingly investing at the equity stage of projects, which never used to happen, right? And it could also be your airlines, which are doing the same, which never used to happen with a typical, the airlines. There are a few examples, but very rarely would they invest in a refinery, an oil refinery, right, to get the jet fuel, because it's a liquid market. Why do they need to? They can just buy the jet fuel at the airport. Similarly, the shipping company, they'd always just buy the fuel oil for their fuel at the port. They don't need to go upstream and buy equity in a project. But that's what's very interesting about this. The investment pool is becoming far more diverse and diffuse in clean molecules. And so you'll see an airline generally looking to deploy equity capital into early stage projects. And same with a shipping company, same with a power generation company, same with a general trading firm or an energy major. That's a really interesting development. So that's one group, right? Let's say your physical market stakeholder with cash, right? And then your second type would be large climate funds that have pooled capital from multiple LPs. They could be from pension funds or insurance funds. They could be from large family offices that are looking to diversify their portfolio. And those climate funds also, some of them are willing to invest at an early stage and see, the maximal return. And maybe they want to not just farm in, so to invest rather at the start of the project or platform growth, but then exit before it reaches construction or before it reaches operation. So this is my point, right? You're saying, the industry's small and there's not much production currently. That doesn't mean that there's no entrance and exit appetite in the industry. On the contrary, there is a lot, because there are a lot of people with a view that this is going to be a very, very fast growing industry, and they want to be able to take the view of investing in and investing out. And HySight's ratings are enabling that changing of hands even before the project or the platform reaches construction. We have analogs in other industries for this as well. The data center boom that everyone is aware of the last few years. There have been data center platforms that have been invested in by large asset managers, and before they even finished constructing or operating one data center, they were sold for 10x what they were bought for. So we're likely going to see the same thing in these clean molecule platforms. Maybe just the last point, right? There are also a lot of family offices who are looking to invest directly in projects, and maybe they are more familiar with the industry that they're investing in than some of the climate funds. Maybe they have personal or family experience in the area or in the feedstock that's being used to produce the clean molecule. So they're another group of investors. But I'd say the largest pools of capital are probably those, physical market stakeholders I mentioned across those different sectors, and then also the climate funds as well.
It's interesting. I note that you had a derivatives background, and I do a bit as well in one of my previous lives. And I suppose there are investors who like the 5 delta options, and there's some investors who like to wait till to get to 35 delta before they feel a little bit more comfortable with it. But then you can buy a lot of 5 delta options. You hope so, one or two of them pay off, and you sell 40 delta in your happy days.
Yeah, so I think that's a really good analogy. Very good analogy. So, sometimes the potential return could be 100x, right? So if you risk adjust the net present value of some of these projects based on the current industry landscape in some of the sectors, and the fact there's not been a project that's done what this project may be looking to produce at volume or location, there is a potential to have very, very high returns. But obviously there is a higher risk of project failure because it's never happened before. So you have to balance all these things together. One of the trends we're seeing is a lot of the funds, and you mentioned you're intimating that a lot of these are sort of venture funds, and you're right? Some of them are effectively venture funds, and other ones they have a portion of their portfolio they're willing to expose to higher risk, higher reward investments, and other portions they will hold back, right? So in terms of the venture funds, a lot of them invested in deep tech or hardware, right, for the transition. And, some of them will be solar panels and so on, but some of them will be on future technologies that they think will help decarbonize these hard to abate sectors. so electrolyzer manufacturers for hydrogen production and so on. And with a lot of those technologies that are as of yet untested, the technology builder will often actually also become a project developer. So in order to demonstrate that the technological readiness level, the TRL, is going up, right? So it goes, from pilot to commercial demonstration to actual commercial scale. They will need to build themselves. And so HySight is getting a lot of interest from those technology companies wanting to demonstrate that their technology does indeed work in practice. And when they're trying to scale for Series B and C, they also come to us to ask us to rate their pilot projects or rate their commercial demonstration plants in order they can then scale further.
I mean, you could see how, it's just sort of folks you wouldn't expect would be interested in this. And, you could see people whose business might be threatened by clean molecules. You might actually want to invest in the clean molecules in case you get the guys who are right. And then you've kind of, you've hedged yourself in a way, you've hedged your own stream. Something, pretty basic, and it shows perhaps my lack of knowledge in this space. But the folks who pay for this, I suppose it's kind of a subscription basis, or you buy it.
So, I mean, we have a platform that's a subscription model, and we also have something called deal flow intelligence. So deal flow intelligence is when we spotlight a project, platform, technology via a rating. And it means that you, as the recipient of the deal flow intelligence, understand what is currently a live deal, right? There will be a project that will be looking to raise for development expenditure, so pre-construction expenditure, or for capital expenditure, so basically the construction costs. And they will come to us, get rated, and then we will effectively spotlight among our user base of over 1,500 active investors and physical market stakeholders that there is this investment raise going on, or there is this offtake opportunity going on, and this is how the project sits. Maybe it's a platform expansion. They've got one project, they're looking to build out another 15 or 10. You need to look what their past experience is, what their track record is. So HySight's rating of their existing project will help you understand potentially how they might manage a future expansion. So this deal flow intelligence is a small innovation in the industry, but the idea is to help digitize deal flow for the investors and physical market stakeholders, and to maximize the ability of the developer or the project platform to raise, right? You're getting in front of as many people as you can at once to try and create more demand for what you're doing. And at this early stage in the industry, we're finding this a very popular tool to try and enable investment decision-making and offtake decision-making as well.
So it's good to be the first mover. When you're the go-to person who you're your go-to outfit where if you want to know, you need to go to HySights. From I guess what I'm thinking is that we have a fair number of sophisticated retail investors, and it sounds like we're not quite at the stage yet where the sophisticated retail investors could get into a project, or far from buying an ETF or anything like that, to be able to get exposure. That sounds like it's a little bit further down the road.
So I think you're probably right, Taiwan, but what I'd say is that there are a couple of indications these things starting to change. So some of the very large asset managers are now starting to who typically have issued ETFs, right, sectoral or topical ETF, let's say. That obviously may be an opportunity down the line, but then also there's a potential to tokenize the investment raises that these companies are doing, right? Which is also something that HySight is exploring with some of the major investment banks and other financial actors, and that would allow for smaller tickets to be created for pooling investment into a larger raise, and that obviously would enable that'd be very compelling for the project developer or platform, but also potentially compelling for the retail investor who may see outsized returns relative to what they might get on the stock market or elsewhere. So that is something we're exploring, but it's probably still another year away. So maybe we check in again in a year, Taiwan, and we see how we've progressed on that.
That sounds like a good idea. You look at the S&P and you're like, well, do I really be long? But can I afford not to be long? So you're looking for, and for people who are sometimes sort of climate conscious, you'd like to have an alternative, and not put not bet the farm on it, but no pun intended, but to to have an investment in the space that you care about. And I think if there's a
Yeah.
lot of folks who you said climate funds who do care about that. I want to take the time that we have left. I want to ask you a little bit about LNG, because you're the expert in that space. I'm sure you, in the time that you've left, you haven't forgotten any of it. So the LNG market, I mean, it seems like a market that still has a lot of growth. I mean, something like 8 or 10% a year. I think I read. Um, you know, in terms of is that a market that's growing? That looks like it'll continue to grow. For 10, 20 years. Is there are we? People talked about sort of. Are you at peak oil? Oh, is there at some point we're going to be at sort of peak natural gas or peak LNG?
I think the peak of LNG is later than the peak of natural gas. If you look at the industry, the breakdown of how much gas is consumed, via pipeline with no liquefaction, and how much is, put in a pipeline from liquefied. Basically, if you divide between pipeline and liquefied natural gas, right? LNG is taking a larger proportion of the total gas market, and I think that will continue. You look at the very large pipeline networks in Europe and North America. There's not so much in Asia, but Europe and North America. In some areas, you'd expect that consumption to drop via the pipeline, but the LNG industry continues to grow, and that is predicated on the ability to remain lower cost than the alternatives, and lower carbon enough to be compelling as well. And so I remember a few years ago, there was a big hope, and still probably a big hope among some in the energy industry, that India and China would retire their coal capacity and switch everything to gas, right? And that would be amazing for the LNG folks, because there's not enough domestic gas in China or India to manage that. I was always a skeptic of that view for lots of reasons, but the last few years, where security of supply has taken a much, much stronger position in government's views of what they need with energy policy, and also some of the other geopolitical tensions that we've seen growing in the last few years, in my mind, made that even less likely than it was a few years ago. If you have a resource that's cheap, domestic, and employs lots of people, it's unlikely you're going to switch that out for one that is more expensive, obviously more emissions saving, but more expensive, from abroad, and maybe even concentrated in the hands of a few origin nations. So I think there is a cap on where LNG can grow. Is that 700 million tons? Is it 750 million tons? Is it a bit higher than that? I haven't done enough of the maths recently to give you that answer, and also my predictive powers are only so strong. So, but there is a cap. I think if I were a retail investor, one thing I'd be looking at is the growth in LNG as a maritime fuel, and how I could gain some positive exposure to that. Because, as I've mentioned, within certain large potential consuming nations, I think the growth will be limited and sectorally specific. But one area which, to me, looks like the next 10 years of growth is maritime use of LNG. The number of infrastructure, so the barges you need to deliver the LNG, has grown massively. The number of vessels that have been ordered that can take LNG as a bunker fuel has grown massively. So if you can find some smart investment in that midstream of delivery of LNG to the container ships or the car carriers, or even your Cape-sized vessels that are looking to use LNG as a bunker fuel, that for me is the real strong growth area in the industry in the next few years. And you're right, Tom. I do still keep in touch, because a lot of the people who are looking at Bio-LNG are also the LNG guys, the fossil LNG guys within these companies.
A rudimentary question for me. In terms of energy density, how does LNG compare with, I guess, the seaborne oil that they burn to run the ship? Like, how does that compare?
Yeah, I mean, there's a reason why we decided to use fuel oil as a bunker fuel, and obviously the density it's second to none, right? In terms of energy content to volume. So LNG is less favorable than fuel oil. But then you look at the alternatives, and it's always this balancing act, right, between reduction of emissions and economic viability relative to the other inputs. And LNG, especially when you dilute or dope with Bio-LNG, you can get a pretty good emission saving, probably 30+% relative to the fossil fuel baseline. And your density requirements, yes, they're higher, but they're probably not so high that they impinge on the vessel operations or impinge on the ability to load cargo, right? Because that's ultimately what you want. You want to be shipping cargo. You don't really want to be shipping fuel.
Potentially, so it sounds like there's potential usage for LNG or some form of LNG for pushing ships, but probably not for pushing airplanes at this stage.
With aviation, right now the only solution we have is SAF, right? Now, when we look at SAF, it sounds like a single fuel, but actually the production pathways are very multiple, and the argument over which pathway will be dominant is very much unsettled, right? So we have something called the heifer pathway, which is basically using used cooking oil and animal fats and things like that to create SAF, and that's been very popular. Technology's proven, it's been deployed. There's still plants, big million-ton plants being deployed around the world, but the amount of used cooking oil we can recycle is probably at a limit or approaching a limit. And that means, like with anything that, if you rely on a feedstock that's at capacity or drying up, then your ability to provide low cost output is reduced. So then there are other pathways. There's something called the alcohol to jet, ATJ pathway, which is less proven than heifer so far. There's also something called the Fischer-Tropsch, which is actually very old technology, but there's been some upgrades and revisions to it to make it more efficient for SAF. And then the final one is the power to liquid, which is basically green hydrogen from electrolysis, so wind and sun and water, and then adding something called biogenic CO2 to produce SAF. So these are the 4 different pathways. They're all more expensive than Jet A1, by the way, and they probably will be for some time. But these are the main routes by which we're going to decarbonize aviation. That's the current view, at least.
Ciaran, thank you so much for that, for the primer on what HySights does, and what Bio-LNG is, and certainly in green hydrogen. Looking forward to checking up with you in the not too distant future to see what other exciting things are happening in the space, and now we know that if you want to know how good a project is in this space, that we go to HySights.
Absolutely. Look, if any of the retail investors watching or any of the sophisticated retail investors are watching and want to find out more, feel free to get in touch. Happy to have a conversation.
I think. Thank you so much once again.